This is the Scrap Metal and Commodities Report by BENLEE and Raleigh Goldsboro Recycling, November 21st, 2016. Last week, commodity prices fell, Wall Street hit new record highs, and multiple positive economic reports were released. U.S. steel production fell slightly, but has been in a tight range for the past couple of months. The U.S. dollar rose to the highest level in almost 14 years, driven by discussion of U.S. trade policies that could hurt other countries, U.S. growth higher than most of the rest of the world, and a high chance that the U.S. Fed will increase interest rates next month. Typically, when the value of the dollar goes up, commodity prices go down, which is a positive for many industries, but the stronger dollar also makes U.S. goods more expensive to sell overseas and makes imports cheaper, which hurts manufacturers and recycling companies. Oil rose 5% for the week, ending at $45 a barrel. OPEC continues to try to cut production to get prices even higher. And this morning, Russia said they may be willing to limit production, which could help OPEC. The oil rig count rose to 19, the largest weekly increase in 18 months. At 471, it is a terrific 49% higher than the 316 low of months ago, but it is still down a huge 71% from 2 years ago. There remains major upside to jobs, steel consumption, and scrap generation related to rigs. Note the oil rig count is mostly price-related, not regulation-related. Freeing up more U.S. land or sea to drill will not increase production unless prices are higher. Iron ore ended last Wednesday at $69 a metric ton, down from last week's $80, but is still up 19% for the month and a huge 86% from 11 months ago. Higher iron ore is driving higher finished steel and scrap prices, as there were more $30 and $40 a ton increases announced last week for finished steel. Scrap ferrous prices rose a bit on strong export demand. Many feel prices could be up again in December despite the strong U.S. dollar and weak U.S. steel production working against it. Stainless 304 scrap remains steady at 31.5 cents as demand remains steady and the dollar helps keep prices down. Copper fell 7 cents to $2.45. Speculation, not fundamentals, drove the recent increases, so fluctuations would be expected, and in fact, this morning's chart shows that copper is about $2.52, which is where it ended about a week ago, again on speculation of more demand. Looking at a one-year chart, we see copper is actually up nicely in recent months. Aluminum fell 2 cents to 77 cents after a small rise for the month. And aluminum remains up for the past year on good fundamentals such as increased demand and cost increases. Aluminum inventories remain near about 8-year lows, which will support stable prices in the months to come. U.S. annual inflation rose to 1.6%, the highest rate in 2 years, which remains slightly less than the U.S. Fed rate of 2%. Housing starts climbed a huge 25.5% in October, the largest monthly increase in 34 years, and the annualized starts of 1.3 million is the largest in over 9 years. Home construction creates great middle-class jobs and supports steady to higher commodity prices. Wall Street hit new all-time highs for the week, a major positive for spending, as increased values support the wealth effect, meaning people have more money to spend as they see more money in their accounts, which again supports higher commodity prices. U.S. jobless claims fell to the lowest weekly level since November 1973, 43 years ago. And the number of weeks that claims have stayed under 300,000 is the longest streak in 46 years. This is incredibly positive data. With that, we hope all have a safe and profitable week.